Hello, everyone. Thank you all for joining us during the Lytham Partners Fall 2024 Investor Conference. My name is Adam Lowensteiner, Vice President of Lytham Partners. Before we begin, for those not familiar, Lytham Partners is one of the country's leading investor relations firms. With more than 2 decades of corporate access experience, we have built one of the industry's most diverse and effective platforms for connecting small cap companies with high quality and focused institutional investors while creating a framework of best practices in all aspects of investor relations. Today's discussion is hopefully yet another example where we can bring value to multiple constituents, and to learn more about Lytham Partners and the investor relations programs we can provide, please access our website at www.lythampartners.com. For this panel discussion titled IPO Markets Alive and Tickin, we welcome Seth Farbman of VStock Transfer, Erick Frim of CFO Squad, and John Borer of the Benchmark Company. Seth currently serves as the chairman and president of VStock Transfer with a focus on pre-IPO NASDAQ and New York Stock Exchange market listed issuers. Seth has built a career in servicing private and public companies and has serviced over 3,000 publicly traded companies to provide SEC, EDGAR, and financial print services related to IPOs, proxy statements, annual reports, shareholder meetings, and all aspects of compliance filings. Erick is a partner at the CFO Squad, a financial and business advisory firm providing outsourced CFO advisory and regulatory consulting services for private and public companies. Erick has assisted his clients over the past 35 years with merger and acquisitions, SPAC transactions, uplistings to the NASDAQ and New York Stock Exchange, both at CFO Squad and at Eisner Amper LLP, where he served as audit director. John is the co-head of investment banking, senior manager director of the Benchmark Company, and has over 40 years of investment banking experience. Prior to joining the Benchmark Company in 2012, John was a senior manager director, head of investment banking, and a member of the board of Rodman and Renshaw, which he joined in 1991. John served for 4 years on the SEC Advisory Committee on the Small Emerging Companies, during which time the Jobs Act was enacted. John currently serves on the board of directors of BioFrontera. Hi, Seth, Erick, and John. Welcome to the discussion.
Thank you.
Thank you. Great to be here. Thanks for having us.
Sure thing. Maybe to kick things off, I know I just gave a little bit of a background on everyone, but maybe in your own words, you could tell a little bit about yourself, your background, and maybe touch some points that you have, with companies going public. Erick, let's start with you.
Okay, sure. As Adam mentioned, I'm a partner at the CFO Squad. I have for the past 30+ years been assisting companies in the process of going public. I help on the regulatory and accounting side. At the CFO Squad, we specialize in SEC and financial reporting by streamlining the audit process to ensure timely and accurate financial reports, which is obviously crucial for the SEC filings. We also provide technical accounting services. We help clients navigate new accounting pronouncements, such as the recently enacted revenue recognition standard, lease accounting standards, complex debt and equity, mergers and acquisitions. So we help clients with all aspects of their accounting and financial reporting. We also provide back office accounting services, some financial modeling, merger and other merger and acquisition support. So CFO Squad, we provide the consulting support necessary to get clients through the arduous process of an IPO filing.
John, why don't we pass it off to you?
Sure, thank you. So I joined Benchmark 12 years ago. Prior to that, was doing microcap investment banking at Rodman and Renshaw. Benchmark is 37 years old. We're a 100-person boutique, institutionally focused research, sales, trading, and investment banking business. When I joined, we started the investment banking business. We today have 26 bankers across all the areas of investment banking, including a heavy focus on public company finance and IPOs included in that. Got 23 publishing analysts covering over 400 public companies, all the way from Alibaba and Amazon down. And in the IPO market, we've been quite active the last several years. In the last 2 years, or just during 24 and 23, we've performed 12 IPOs to this point, including some notable successes. And that's just in the microcap space, where we've been the lead manager on the IPOs. So a lot of experience in bringing companies out public.
Seth?
Sure, and I can confirm, John's done that many IPOs because we've had the pleasure of working on many of them with him, and Yeah, we're excited where the IPO markets are, and great discussion. So I run VStock Transfer. We've been around for about 13 years. Prior to that, I had opportunity to be in the corporate compliance world with V filings, V Corp, and V Check. Nothing that I've done is ever sexy or exciting, just very corporate and compliance oriented. Working with companies to help them through that IPO journey. So at VStock, we work with about 900 public companies, mostly small cap, NASDAQ, New York Stock Exchange, American listed companies. And we try to do as much hand holding as we can throughout that journey.
Great, thank you. So let's get right at it. The IPO market has been a little bit tepid this year, starting to warm up a little bit. In your opinion, where are we in the cycle, and what's your outlook for the IPO market? John, why don't you take this one first?
Okay, thanks. So as you said, the market has been tepid. I would say somewhat volatile. There have been some significant changes in the last several years. Some that are sort of market structure and some that are more regulatory and around the listing of the companies with their exchange applications. I'd say in the last 2 years, the market has changed because the long-only institutional investors have in many cases stepped back from other than the largest and most visible IPOs, so sizable ones led by bulge bracket firms, and filling the void to an extent have been a lot of smaller firms doing IPOs that have been sub $10 million and in some cases sub $5 million. That's been the way that the market has been. Unfortunately, in the last couple of years, there have been a lot of companies that have gone through the efforts and work of working with people like Erick and Seth and myself. And then because of market conditions and sort of the view of the capital availability, have not even taken their companies out public by publicly filing. Mm-hmm. And then just over 2 years ago, the exchange, the NASDAQ exchange, changed its process of accepting companies for listing by inserting itself very heavily into the book building process that the small firms are doing. So unless you're going on to the NASDAQ Global Select, basically in order to get an approval from the NASDAQ to list your shares, they need to approve all the investors in the IPO. Unprecedented change in the market structure over the last 2 years, far more complicating. That said, I say we've done a number of the microcap IPOs. We're very much focused on understanding how to market the company when we take it out, where the money can come from, which will be 3 buckets. One is the small institutions and family offices, the syndicates that we can put together, and then friends or related parties with the issuers. We're committed to the business. We're in process right now with a number of transactions, and if the interest rate environment cleans up a little bit and the liquidity moves from fixed income back into equities, I think we'll have a good next 12 to 18 months.
Seth?
I think that I like to think that I'm in the driver's seat of a lot of different directions of companies going public and all different types. I think a nugget of data that I could share with the listeners or the viewers is that maybe 2 categories. Number one is I feel like I'm spending more so than ever before my late nights on Zoom with companies based in Malaysia and Singapore and Japan. And I think that there's a big push over the last 6 to 9 months of companies looking to get into the U.S. capital markets. So I think that's something on the IPO horizons that we should be expecting. And then I think that, as John had said, there's a lot of up and down over the last couple of years, specifically in the SPAC category, where obviously it was a big boom for all of our kids' education funds at that point, and then it dried up. But I do have that pulse that it is coming back, maybe in a different form. Companies are being a little bit more selective about the process, but I would say to be on the lookout for foreign issuers and SPACs in the near future when we're discussing the IPO market.
Erick?
Yeah, I mean, it has been slow enough from my vantage point as well. I mean, we are hearing signs of things beginning to to pick up some. We're looking forward to a much improved 2025. I mean, the number of IPOs has increased somewhat this year. I mean, there's been a couple of big deals this year, but John raised a couple of good points. Where I'm seeing companies get stuck is in listings. NASDAQ has taken a much different stance in the recent period. Not only on the investor, are they vetting all the investors? They're putting a lot of demands on companies with respect to the composition of their board, capital requirements. I mean, it has gotten getting a company approved to be listed on NASDAQ has gotten much more difficult in the past 12 months from what I've seen.
So up to this point, we focused the conversation on an IPO, but there are other ways to become a public entity. What are some of the other ways to go public when should a management team consider maybe these alternate routes? Seth?
I think, well, in terms of guidance, if I knew that, I'd be the investment banker on the call. I'm not, so I leave that to John. But I do think that just broad strokes, you're looking at the SPAC route, as we spoke of. You're looking at Reg A. I think the new shiny object, maybe not new, but has been taken advantage recently, are the direct listings. So there are a couple of different options, for people to consider. What are my objectives for going public, which I think we'll get to later on in the call, and then what's the best route of those choices to get there?
Yeah,
John, let's pass it on to you.
Well, having been doing this for decades, and there's an advantage of being the oldest person on the call, and kind of seen it all and tried it all. Our firm was involved over the last 4 years in advising and working with companies on 34 successful de-SPACs. And in 1 year, I think we did 16.
Wow.
I think this year to date, we've done 3 or 4. And so obviously the velocity has changed, but the structures have changed a bit now. And it seems like people are coming at it from a different angle and with a lot more selectivity. So the companies that are able to get through the SPAC window are going to be far more substantive and not just whiteboards with potential revenues 3 or 4 years out that might be hoping to put people on Mars. Although that might be an IPO we see at some point. We've seen some interesting transactions in the what I'll call RPO. So where you take a company that's already exchange listed and you use it as a vehicle, either line of business consistent or line of business different. Raise capital around it and put a company into it. We've seen that with very specific transactions. And then, for example, this last year, there was a company on the exchange called Silversun Technologies, which basically sold itself through doing $1 billion pipe. And their market cap when the deal was announced was about 18 million with a private equity sponsor. And since they actually did that closing, that entity raised another $5 billion. Wow. So they now have $6 billion market cap, $6 billion in their bank account, and they have identified an industry, which is building products, which they're going to use to make an acquisition and to roll up. So that's a way to get public in certain ways. The uplistings, we've seen the cross listings from other areas of the world. Australia lately, we've seen a number of them where they want to move onto a U.S. exchange. And then the plain old hard-fought everyday IPO for the companies that qualify and can actually bring the management team, the corporate governance, and some of the capital. I think that's still going to be the most active route. But I think when somebody comes to see us, we sort of pull out the whole menu and go through the different approaches and see if we can find some commonality in thought process with a management team.
Erick?
Yeah, okay. I have right now I've got clients looking at the direct listing route, which I think is suitable for companies with strong brand recognition and have enough capital to support a direct listing. It's not an ideal thing for a small company that's unknown or doesn't have sufficient capital, because you're not raising any capital in a direct listing. The SPAC route has been mentioned. The de-SPAC transaction has been a couple of notable de-SPAC transactions that DraftKings, Virgin Galactic went public via de-SPACs. The reverse merger route is always out there. The regulatory environment around reverse mergers or mergers with SPACs has been tightened up a lot over the past years under the current administration at the SEC. They clamped down on some of the rules, but those are the basic ones that I have seen. I have also seen a few cross listings, particularly out of the Canadian Stock Exchange, where someone wants to move from the Canadian Stock Exchange to be either listed in the US on a US exchange or cross listed on a US exchange. So I've seen basically what I've seen. Those are the paths that I've seen: a direct listing, special purpose acquisition, SPAC, reverse merger. Those are the traditional alternative paths.
So companies go public for many reasons, some more obvious than others, but in your opinion, what should be the main drivers for companies to take the plunge? John, let's start with you.
Well, given the cost and potential liability, as well as the uncertainty around getting onto a public market, I think that it's really imperative that you have a good use for capital. If you're going public just so you can wake up in the morning and look at CNBC and see what you and your employees have in their potential retirement funds, then that's probably not a good way to go. Being able to get capital and apply it either to the growth of a business that's got a commercial model, or to further the development efforts of development stage companies, principally in the life sciences space. We do a lot of life sciences. Those are really important. Another and secondary, but very important over time is that we've had several companies we brought public in the last couple of years that over the course of being private, they've raised in excess of $100 million. And in some cases, it's with large institutional investors. And in one case, it was with 12,000 individuals that had put up 170 million over the course of almost a decade. And those folks are locked up and have no liquidity and very little path to achieving liquidity if the company remains private. And so if you have a good reason to be able to go public, use the capital, and then provide some liquidity to either you're very happy or long-suffering shareholders, those are probably the two top reasons in my book.
Seth, what do you think are the reasons that companies should go public?
Yeah, John definitely hit on them. It's funny, we get this question a lot because as the transfer agent, people start talking to us when they're contemplating that route. Many people have already committed, but I was asked this question a couple of days ago, and this is breaking news here. I came up with this acronym called CAVE. CAVE. You want to come out of the cave, you want to go public. C is that they use their money for currency, which, something is unique. A is they want to do an acquisition. They don't have the $30, $40, $50 million to acquire, but they know, or the CEO is convinced that he has an acquisition strategy. V is valuation. I think that, take two companies side by side, one is private, one is public, the valuation will come into play. And E is to attract employees, because they want to get top talent, and very often money is just not going to cut it. So if they can use that stock to attract them through options or warrants, and to John's point, I guess E can also double as an exit strategy, where people have just said, "Listen, I've been in this a long time. It's time to make my exit." So that's primarily what we see when companies are looking to go this route.
Great, I love that. Erick?
Yeah, I'm just going to echo the same thing. It's basically the main reason in my mind. Number one, access to capital. You have much greater access to capital as a public company. You can access larger amounts of capital. It's really that to me is the primary reason. Secondary is liquidity for existing shareholders. Like people have talked about long-suffering shareholders. I have clients that have had shareholders that have been looking for liquidity for years, and it's one of the ways you get it for them is you get the company public. They can then sell the stocks. The valuation becomes clear. That's another good reason. It's also, as was mentioned, this public shares are good acquisition currency. I mean, their currency that a company can use to acquire other companies, either to for strategically to change its business, to grow its business. It is good acquisition currency, and employees like stock options, so it's good for employee attraction and retention as well.
So the company decides they're going public. Now what? What are some of the important steps necessary for a company to achieve before going public to make sure things run smoothly on the first day of trading? Erick, can you start?
Yeah, I think one of the key things that the company needs is a good investor relation strategy to sure that they're communicating what the opportunity is for the investor. I also believe they need to be ready for all the increased scrutiny, the demands of being a public company. They have to have the marketing and public relations in place, going back to the investor relations, to generate buzz and interest in their IPO. And then, when the bankers come in with setting the appropriate price and distribution for the offering. And so that all has to be in place. And then, your employees need to be engaged throughout the process, because it is very distracting and time consuming.
John?
Well, one of the things I say, and I ask the question when people come in here to talk to us about these different options, is make sure you have the right professionals around you. And from the lawyers to the accountants, as Erick just said, the IR, and make sure that you're communicating effectively with those who are important to you and the success of the business, including your management team, your employees, and your shareholders, if it's a widely distributed or a broad group of shareholders. Understand what is going to drive the continuity of the team that you have. Make sure that you've got line of sight on how the business is going to be doing. And a lot of people come in and say, I had a great year last year, and I want to go public. You say, okay, well, what about next year and the year after? Those are more important than last year. And I had an example from years and years ago, a very successful public company. And the first time I met with them, I said, what kind of releases are you going to have over the next 6 months? And the CFO opened the drawer, and he had 12 months in there with labels, says, here's our press releases for the next 12 months. Wow. And I can't tell you what every one of them has filled in the blanks, but these are the releases that we're going to be able to bring out based upon our clinical programs, our revenue numbers, our quarterly reports, and those types of things. Thinking like a public company and understanding what investors expect as far as the cadence, the rhythm, and then create the expectations and keep their eyes on what you're doing are critical to think about. And can you do that before you make sure you can do that even before you set on this path?
Seth?
Yeah, those are great points. I think, just maybe honing in on sort of IPO day, when the excitement, otherwise known as madness, sets in. I think that having a game plan with your shareholder or shareholders prior to that day is really critical, and communicate with them in terms of their expectations. Too often, a company or a shareholder will call us up on the day of or the day after and say, hey, sell my shares. I'm like, well, sir, there's a difference between a transfer agent and a broker dealer. You need to go open up an account with the benchmark company if you want to liquidate or sell. We're just the transfer agent. They don't always understand that. Or if the stock goes down, we've had some Reg A where the shareholder's not to their own fault. They're excited about the company, but they may not be educated. So he's like, oh, the stock is down. Can I return my shares? No, you can't return your shares. It's not it's a no backseat policy. But I think that there are details that if you educate the shareholders prior to that week, explain to them what's a DTC transfer, what's a DWAC transfer, what's a DRS transfer. Make sure their accounts are set up, they're in communication with their brokers, so that the brokers are talking to the back ends of the clearing firms. If you can manage their expectations, then that IPO week is going to go a lot smoother.
So we talked about going public. Now let's talk about the company is already public. What are some of the necessary things that management team should undertake to having a successful public entity? Any tips or pointers in your opinion, any must-to-dos, and any things to avoid or common mistakes companies make? Seth, how about you start?
I would just say that in terms of focusing on the CEO role, that he has to recognize, and of course everybody recognizes it, but he has to embrace the fact that now that you're a public company, you're essentially wearing a minimum of 2 full-time hats, right? Up until now, you were growing the company, but now you're focused on the company, but you also, focused on shareholder interaction, communication, legal, compliance, which is an entirely separate full-time or 2 full-time jobs. So just, make sure that you're allocating your own expectations of like, I'm a public company. I can't just sit back and continue to do the same thing that I've done to get to this point. When that bell rings, that's when the hard work has to start.
John?
Well, companies think going public is, and sometimes they believe it's going to be very sexy for them. You're going to get to go over and push the button at NASDAQ. You're going to be able to stand across the street and have your picture taken with your ticker up on the billboard on the NASDAQ building. And that is exciting. You get to go out and have a steak or whatever you decide for your closing dinner. But then the real hard work starts. And if you have in mind and maybe get some coaching, and I'm not sure who does this. It's certainly not our role, although we play psychologist as often as we do investment banker with a lot of our clients, is you can't expect that everybody's going to love you as much as you do. And while you're being taken public, and there are many firms out there who do this, they're going to say a lot of nice things to you. You'll get the platitudes. You'll get the, boy, you've really got this business, down. Your customers love you. You're going to grow like crazy. And then, as they say, with the best battle plan lasts until the first shot is fired. Mm-hmm. And then, your CFO resigns, or one of your board members, doesn't like what you're doing, and you have dissension amongst those who you value their advice and need to have a consensus with. And those are the types of things that if you plan through these ahead of time, then you'll be able to sort of come up with the things you can't plan for, like COVID. Just go back just a few short years. And if any of us had thought as the year turned to 2020, that we were going to be dealing with, you're going to have to stay home for a year, and none of your customers can go to your restaurant, your shops. They won't be buying your goods. How am I going to survive that? We would have been in a far different setting. So expect the unexpected, plan for what you expect and what you've heard is going to be bad, and then double it, and make sure you have a very solid team around you. Because if you end up being the only person there who really cares about how things get done and getting them done, you're going to be very lonely and in trouble.
Erick?
Yeah, echo a lot of the same points that John just said. I think some things a company must have in place is strong corporate governance. They need a good board of directors, a robust board of directors with diverse experience that can advise management. And on the strategic plan is going to be critical, because the strategic plan's got to include, the contingencies, and, how do you deal with these things? Got to manage your risks. Like I said, it requires a full-blown strong management team more than anything else, but those are the key things. You got to be prepared for transparent financial reporting. Back when you're a private company, maybe you shared your financial reporting on a regular basis with your private equity investors, your venture capitalists. But once you're public, your financial reporting has to go out to the world. It has to be clear and understandable. It has to be timely, and you've got to be compliant with all the SEC requirements, rules, and regulations. There are a myriad of them. That's where we come into place. We help with that, but that's the critical. In terms of a strong leadership team, I think is critical. Focusing on long-term value and engaging with all stakeholders, shareholders, employees, customers, partners, ensuring that you're communicating the plans and future growth of the company clearly. But don't underpromise. Don't overpromise and underdeliver. That will hurt your stock price very badly. Don't Be sure you're communicating on a regular basis. Get to be sure you're in time with the cadence of what the market expects, and stay informed about industry trends and competitive dynamics. Those are just a few things that cross my mind.
Great. This has been a great discussion. Anything else you want to add before we conclude the discussion? We'll start with John, then pass it to Eric, and then conclude with Seth.
Well, just as I always tell people when they look at doing something that's going to be strategic, whether it be an acquisition, a sale, a go public transaction of any type, whether it's a SPAC merger, an RPO, or or RTO or otherwise, is expect it's going to take about twice as long as you hope and think. And just make sure, like I said before, you got the right professionals around you, because if you think you can write your own documents, do your own accounting, and communicate all by yourself, you got way too many hats on.
Yeah. Ditto. I mean, to me, the first step in going public would be, you got to be prepared. And the first step in that is to, assemble your team. As John mentioned, going public is an arduous process. It's distracting from your business. It's more than full-time in many instances, but you need to be sure you've got your team in place, your lawyers, your accounting group, your auditors. Be sure your auditors are PCAOB registered. A lot of times clients come to us, we need to get an audit done because we want to go public in 2 weeks. I'm going like, have you started the audit? Do you have a PCAOB registered accounting firm? PCAO what? So some of the things that are, that are basic to us that are practicing it all the time is not clear. So we always advise companies when they start thinking about it, be sure you have all your whole team in place, and that they know each other, your auditors, your bankers, your investment relations, transfer agents. You need the whole team ready to go and be involved in the process to advise along the way. Being the accountant here, I've always got to stress that because I always seems to me that every time I get pulled into helping a company go public, the audit is the quote, the long pole in the tent. It's what's holding up the process. I strongly encourage companies that are contemplating going public, get their audits done, have their audits ready before they get too deep into the process, because if you wait until you're a month or two from filing, you're not going to be able to file when you want to, because the audits always take longer than expected. They're always more complicated than expected. Get them done, get your internal controls in place, and be ready for a lot of scrutiny.
Seth?
Yeah, I would just end on two notes. The first is, we've been focused a lot about that IPO journey, but once you're there, they should probably look a year or two ahead, like John had mentioned with the press releases, meaning they have to recognize, some of the heavy lifting or the new compliance items that they're going to be exposed to for the first time. Like, look ahead 6 or 12 months, whether it's a proxy statement or an annual meeting or hosting a virtual meeting. These are all things that they want to plan for as early as possible, so they don't get surprised when the time comes. And lastly, I would suggest they reach out to guys like you at Lytham in terms of, marketing and social. Too often we see that companies will go public, they'll put out a press release, and then they'll come to us and they're like, just for guidance, like, why do I hear crickets? Like, why isn't anybody running to buy my stock? I'm like, well, it's a all fronts process. In other words, it's roadshows, it's social, it's digital, it's conferences, it's IR, it's PR. You can't just put out a press release and hope that that things move. So they should just make sure they should act as if they're a media team. I don't care if they're selling widgets or cars or products. At the end of the day, they're a media team, and they've got to really focus on their storytelling.
Seth, Eric, and John, thank you very much. I thought this was a very productive and great discussion. Thank you again for your time today. Greatly appreciate it. Thank you, everyone, for listening. We hope you all enjoy the Lytham Partners Fall 2024 Investor Conference. Have a great day. Thank you.